As the market continues its session, BigBear.ai Holdings, trading under the ticker BBai, is currently priced at $5.945, reflecting a modest intraday gain of 0.08%. The stock has seen a session high of $5.98 and a low of $5.61, with a significant volume of nearly 49.8 million shares changing hands. While this slight uptick might appear as routine market noise, it masks a far more turbulent and deeply uncertain reality for a company positioned at the very heart of the artificial intelligence revolution. The common market narrative paints BigBear.ai as a high-growth player in the critical national security and defense intelligence sectors, a smaller, more agile competitor to giants like Palantir. The expectation is that in a world increasingly reliant on data-driven decision-making and predictive analytics, a company with BigBear.ai's expertise should be on an unstoppable upward trajectory, fueled by lucrative government contracts and the insatiable demand for AI. However, the reality presented by its recent performance and underlying financials tells a starkly different story, one of missed expectations, operational hurdles, and a dependence on government spending that has proven to be a double-edged sword. The tension between the promise of its technology and the fragility of its financial footing is where the true story of this stock lies, a story that every investor considering an entry point must understand in its entirety. The general belief is that the AI sector is a rising tide that lifts all boats, and BigBear.ai, with its specialized focus, should be a prime beneficiary. Investors see the ticker BBai and think of the explosive growth potential of AI, the massive budgets of the Department of Defense, and the critical need for advanced analytics in modern warfare and intelligence. They see a stock that has shown incredible volatility, with a 52-week range stretching from a mere $1.36 to a high of $10.36, and they see opportunity in that volatility. The expectation is that a few major contract wins could send the stock soaring, making early investors handsome profits. This narrative is actively promoted on social media and in investment forums, creating a constant buzz around the company's potential. However, a deeper, more critical analysis reveals a company struggling to convert its backlog into consistent revenue growth. The recent Q2 earnings report was a significant blow to the bullish thesis. The company reported an 18% year-over-year decline in revenue, a figure that not only missed analyst expectations but also forced management to drastically lower its full-year revenue guidance and completely withdraw its EBITDA targets. This isn't just a minor setback, it's a fundamental crack in the growth story that has been so carefully constructed. The disconnect between the market's high-flying expectations and the on-the-ground reality of BigBear.ai's performance is a chasm that is growing wider with each passing quarter. For those looking at their individual brokerage accounts, considering platforms like Fidelity, Robinhood, or SoFi Invest, it's crucial to look past the hype and into the hard numbers. The recent stock movement has been a roller coaster, reflecting the deep division between bullish optimism and bearish skepticism. Just yesterday, the stock surged on the back of heavy options trading, with call volume significantly outpacing put volume, a clear indicator that some traders are betting on a near-term price increase. This bullish sentiment was further fueled by news of a successful deployment of its enhanced passenger processing system at Nashville International Airport. However, this positive momentum is constantly being challenged by the memory of the post-earnings plunge in August, when the stock plummeted after the company revealed the extent of its struggles with government contract disruptions, particularly with the U.S. Army's efforts to consolidate and modernize its data architecture. This highlights the immense risk associated with BigBear.ai's heavy reliance on government clients. While these contracts are large and potentially lucrative, they are also subject to the whims of political budgeting, shifting priorities, and bureaucratic delays. The trading volume, while high, is indicative of speculative fervor rather than long-term investor confidence. The constant churn of buyers and sellers creates a volatile environment where the stock can swing wildly on any piece of news, no matter how minor. Institutional ownership sits around 35%, with major players like Vanguard and BlackRock holding significant stakes. However, there has also been notable insider selling in recent months, which can be interpreted as a lack of confidence from those who know the company best. For anyone engaged in online investing, perhaps using Schwab Intelligent Portfolios or interactive brokers, these conflicting signals make for a very complex and high-risk investment thesis. At its core, BigBear.ai is a provider of artificial intelligence, machine learning, and data analytics solutions. The company's business model is centered on providing its clients, primarily in the U.S. federal government's defense and intelligence communities, with end-to-end data analytics platforms. Their stated goal is to help customers achieve decision dominance by operationalizing AI and machine learning at scale. They offer a suite of products designed to observe, orient, and dominate in complex, data-rich environments. This sounds impressive, and in theory, it is a business with a massive addressable market. The company has secured contracts with various government agencies, and its technology has applications in areas like cargo security, passenger processing, and military intelligence. However, a look at the company's financial history reveals a persistent struggle with profitability. Despite its innovative technology and access to the lucrative government contracting market, BigBear.ai has a history of declining earnings and has been consistently unprofitable. The latest earnings report showed a staggering net loss, exacerbated by non-cash charges related to derivative liabilities and a significant goodwill impairment charge. While a backlog of around $380 million provides some visibility into future revenue, the company's inability to translate this backlog into strong, consistent top-line growth is a major red flag for investors. This is a critical point for anyone seeking investment help or looking to self-invest online. Before you invest online through any of the popular investing sites, a thorough examination of the fundamentals is paramount. Comment below what you think is the biggest hurdle for BigBear.ai to overcome in the next year. Looking ahead, the future of BigBear.ai is fraught with both significant opportunities and substantial risks. The primary catalyst for growth remains its ability to secure and, more importantly, execute on large-scale government contracts. The global geopolitical landscape, with its increasing focus on technological superiority and intelligence gathering, provides a fertile ground for companies like BigBear.ai. Expansion into international markets and the commercial sector also presents avenues for growth and diversification, reducing its heavy reliance on the U.S. government. The continued advancement and adoption of AI across all sectors of the economy is a powerful tailwind that could, in theory, propel the company forward. However, the risks are equally, if not more pronounced. The company faces intense competition from larger, more established players in the defense and intelligence sectors, as well as from a plethora of nimble AI startups. The very nature of its government-centric business model exposes it to significant political and budgetary risks. Furthermore, the company's current unprofitability and negative cash flow raise concerns about its long-term financial stability, especially in a higher interest rate environment where access to capital can become more challenging and expensive. The stock's high volatility and the recent downward revisions to its guidance suggest that the path forward will be anything but smooth. For investors using platforms like Fidelity Investments, with access to a wide range of Fidelity ETFs and Fidelity mutual funds, or those utilizing the trading platforms of Robinhood or SoFi, the decision to invest in a company like BigBear.ai requires a high tolerance for risk and a deep understanding of the complex interplay between technological promise and financial performance. In summary, the narrative of BigBear.ai as a fast-growing AI powerhouse is colliding with the harsh reality of its recent financial performance. The expectation of exponential growth driven by the AI boom and government spending is being tempered by the reality of revenue declines, mounting losses, and the inherent uncertainties of its contract-dependent business. The intraday stock price, while showing a slight gain, is but a fleeting snapshot of a much larger and more complex picture. The stock's trajectory will ultimately be determined not by the hype and speculation that currently surrounds it, but by its ability to execute on its backlog, achieve profitability, and demonstrate a clear and sustainable path to long-term growth. The tension between the promise of its technology and the precariousness of its financial situation remains the central conflict in the story of BigBear.ai. For investors, the challenge is to see beyond the seductive allure of the AI narrative and to critically assess the underlying fundamentals of the business. The expectation is a smooth ride to the top, but the reality, for now, is a volatile and uncertain journey through